Global stock market chaos and how it relates to gold. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard as the Ainslie Group celebrates 50 years. Today, we welcome back Brenko. On Monday, we had Sam talking about the chaos that was happening out of the situation, really, with the Japanese yen and different things that were going on there. Yesterday, Alex did a deep dive on that, really explored it in a bit more detail. Today, we've got Brenko on to really talk about that correlation back to gold and how all of that relates. So how are you going today, Brenko?
Yeah, good today, Chris. Keen to talk about today's topic. I think there's a lot going on. And obviously Monday was chaos around global stock markets. So we'll get into a bit of that. Should be good.
It certainly was. And like there's lots of reasons. I mean, we talked about that at the time with Sam and Alex for that matter. We sort of had that start of an event that might have been the data out of the US that then led to further problems with the unwinding of the carry trade in Japan. Like lots of little intricate parts that sort of link together. But do you want to maybe start us off by elaborating on the economic indicators from the US? Because I know that was really likely the cause of it all. So maybe can you step us through that and how you saw the situation unfold?
Yeah, so pretty much there was some data released from the US, was to quickly overview it. There was the non-farm payrolls that came out, and that basically the numbers did not reach anywhere near expectation. Unemployment came in at 4.3 and it was supposed to be 4.1. And then non-farm unemployment only increased by 114,000, and it should have been 175. Now, as we've discussed on this show before, these numbers are always heavily manipulated and usually later revised down. So it's almost like everyone woke up and realized that, the data isn't as good. But it's been like this for a while. But I guess now was the first time it's been kind of publicly displayed as such. And obviously, this data that came out also has the same embedded assumptions that's impacted the previous 2 years worth of data. So basically, everyone woke up to these horrible numbers, and the stock markets globally, US, Japan, reacted quite negatively. Just a few in the US. In the Dow Jones finished down 2.6% on Monday, NASDAQ 3.5%, and S&P 3%. So it's quite large decreases, and it was all a result of these job numbers. That was the main kind of driver.
And do you think, I mean, you mentioned this before, do you think part of it was that if we're getting used to those numbers being revised lower, if they were already fairly bad to start with, the expectation is, well, they'll probably end up being revised lower again.
Yeah. Yeah, I do. I think we're going to probably see these numbers revised lower again. And I think it just highlights the importance of really understanding what's going on and looking under the hood. And
Hmm.
like, this really isn't much of a surprise. Although ironically, we were talking about how good like the inflation numbers were last week. Usually I'm the bearer of bad news. And I was like, oh, look, these inflation numbers are pretty good. And then, we have this horrible news next week. So maybe,
Actually, I
maybe,
hadn't thought about that. So you might be the inverse omen here because you were very upbeat last week, and then look what happened. So we
yeah.
won't hold you to that one specifically, but that's very interesting.
I
Um,
know. Maybe I should have looked. I mean, that was obviously a different data set. Inflation is different, still manipulated, but very different than this data. I think the unemployment data we've known has been heavily manipulated for a while. But yeah, a bit of reverse omen action for sure.
if we turn our thoughts to gold a little bit here, we've seen gold do the safe haven play to some degree during market turmoil, but the problem is usually or often we have that dip in the gold price initially. So while we have the major sell off, you tend to see the gold price dip as people just sell whatever they can when they're trying to cover positions or for whatever reasons they need to sell. Is that what we saw this time, or is it, what was the investor behavior this time
Yeah.
as it played out through the gold market?
So I guess the key point takeaway from this is it's kind of a double-edged sword. So given gold is highly liquid, right?
Hmm.
When investors need to meet margin calls, one of the first things they sell is their precious metals. So we saw gold drop 3.2% before finishing the day down about 1.3, and silver dropped a lot as well, like over 7% on Monday. And again, it's because these precious metals, they can be sold easily to meet liquidity requirements. So even though it is a hedge, and we did see it actually rebound a bit today as well, And we're still obviously up quite a lot this year. Even though it is a hedge, it's kind of a double-edged sword how liquid it is, in that it is actually the first thing to kind of go down because people are trying to sell to get capital to fund their other kind of failing investments.
Yeah.
So that is why we saw that dip, and that is kind of consistent with previous crises, which I think we'll get into later.
And yeah, I do want to get into that because what was I mean, this wasn't necessarily a crisis of the scale that we talk about
Yeah,
when we talk about
not at all.
COVID
No.
or the financial crisis in 2008. Like this, it felt to me like a bit of a, I've been using the word stress test. That's what it felt a little bit like, that you sort of had this stress test between people testing, seeing what would happen in a big sell off, but it wasn't actually that sort of chaos. That's my interpretation, at least. So how does this compare to those periods of time? Is that how you viewed it as well? That similar but not the same?
Yeah, so I do think obviously they are very different, but in terms of the way that gold moved during those crises, I think it's actually a good comparison. So, for example, in the pandemic sell-off in 2020, we saw multiple days where gold saw plus or minus 3% declines, right? So quite
Mm.
significant declines, similar to the one we saw today. And then in 2008, we saw it drop over 7% in October 2008. So it actually is very common that during these crazy periods, gold does have these very short, spurts where everyone's trying to sell it to just pay off their different other assets. And in terms of actually comparing this to the past previous crises, I do agree. I think this is much, much smaller. And I think that I'd honestly argue a slight overreaction.
Mm.
Uh, Personally, I don't know what you think about that, but I think that, and we saw interestingly crypto rebound today as well. Um, and I know we saw that a lot of equities rebound 2 nights ago, now kind of fallen again. But I think that again, if the basis is this unemployment data, which seems to be one of the main drivers, there are other drivers, but that's one of the main ones. Then I do agree that people are overreacting slightly in general.
And my take on that, I kind of agree with you there in a bit of an overreaction. Not that those things aren't real, the underlying drivers, but when you think about where we are in the cycle, I mean, we know that we're heading into rate cutting out of the US. That's now pretty much a certainty. We've got other liquidity forces at play coming into the election, which is rapidly approaching the US. We've got lots of reasons why the world is going to be pretty flush with money and funds flowing in. So it's not really unexpected to think that we're going to have more stimulus, more
Yeah.
economic momentum flowing into the end of the year. So it felt a little bit like I think that description before, the overreaction, or it was that little bit of a stress test of how people would respond when it's the real deal. If I just say it sort
Yeah.
of like that, it doesn't quite feel like we're there yet, because normally that would happen in an environment where many of these indicators were going in the other direction.
Yeah, I agree with that. I think um, even yeah, just doing some reading on some of the other drivers people were talking about. I mean, one of them was like that maybe AI is overvalued, and it's
Mm.
like, well, that's been the case. You could have that opinion for a while, so why would you wake up now today all of a sudden and think,
What was the specific reason it was that day? Yeah.
yeah? So I think yeah, just kind of reading some of the stories on it and things like that doesn't really add up as to this being, in my opinion, a massive kind of long term thing. I think we can get into shortly, but either way, I think precious metals will perform even if it is, catastrophic, which I don't think it is.
So let's wrap up on that. Like what is the play here, or what lessons? Let's take a slightly different approach. What lessons can we learn, or have we learned over this last week about the role of gold and silver in a portfolio when you're in this type of environment? And I I do think, regardless of whether this is the start of something much bigger or whether it was an overreaction, one way or another, I think we're heading into a lot more volatility ahead. So, what's the role of gold and silver in that environment?
Yeah, so I do think in that environment, the floor price, or I don't know, of precious metals is going to be higher than other assets in terms of it's not
Mm.
going to bleed as much and it's probably going to go up. And we saw that again reflected on Monday where it went down 3% and rebounded. And then that was like, the big thing for gold when it did a good job compared to other assets on Monday. And then also I would say the ceiling is as high as ever, given that increased volatility. So you have a higher floor because, of basically the way that I guess the economy is structured and global turmoil going on. And then that global turmoil also gives it the higher floor. I guess the only lesson that we can again learn is bake in some short-term pain in your precious metals portfolio, when you have these surprise events, because people are trying to sell off their assets and sell gold to cover their other margin calls and things. So I guess the lesson would be, don't be scared if you do see something like that. It's not a big deal. It's expected. That's probably actually a big lesson, I would say. And then in terms of the future outlook, I think it's still strong.
And I suppose the only other bit I would add to that would be those sell-offs can actually be a buy the dip opportunity, because when others are panicking, it tends to resolve to the upside after that when people realize, well, I actually want gold and silver in my portfolio to offset the problem that's been created. So that is one of those buy the dip opportunities where you can get some really good bargains. And I know we've certainly seen a lot of that in the office over the last few days, where we've had really quite large volumes of people coming in going, well, okay, it's on sale at the moment. I want to take a piece of that because they're probably quite confident that it's heading right back up there.
Yeah, I mean, there are a lot of examples of that. Just a quick thing I just thought of then was in 2020. It's funny because it's Warren Buffett that made this mistake, but Warren Buffett sold like the airlines at their lowest point because everyone was scared about what was going on during the COVID year, and eventually, obviously, unless you're Rex Airlines, they rebounded, which I don't think Buffett was heavily invested in. But I guess what I'm trying to say is everyone can be, even one of the greatest investors of all time, can be prone to making mistakes in fear of the moment.
Yep.
So, it's very common. And I think that as shown then and as shown lots of other times throughout history, that fear is usually a good time to buy. And that's what Buffett usually believes in himself.
Well, I think some great words of wisdom there, and really a useful analysis of it all throughout this week. I think we've really covered that in quite a bit of detail, looked at it from all the different angles, but it's good to see some stability returning to the market, and we'll pay attention and see what happens next. But until next week, thanks for your work on that, Brenko, today.
No worries. Thanks, Chris.
Thanks everyone for watching. We'll chat again soon.